Okay, and Coach T here, and I just want to do a quick video. I actually had an email come in from a student, and I am going to check that right now. You know, we do a Coaches Mailbag quite often on our podcast and answer questions from our students and whatnot. And Dat, you sent me a great email, and so I'm going to feature this one as an email for our upcoming Coaches Mailbag and maybe put it on our blog over at Trading Justice. He says, "Hi Tim, how are you? It's been a while since I reached out to you. I would like to reconnect with you and continue to learn from you on how to trade the right way." Well, that's what we're here for. And ask for your feedback on my trade setup and development as a trader. Thank you in advance. I promise to keep in contact and not shy away anymore. Would you look at my trade setup for JPM, OMC, UPS, and WFC to see if they are a good trade? These are all demo trades. Thank you. My goal is to work on my trade journal and fill up 100 trades and build a habit on journaling my trade. And after the market study report, I have a market bias. Your market bias, what you are saying here, Dat, is -1 to -2 on YM, ES, NQ, and RTY. For those who don't know what that is, that's the Dow Jones, S&P 500, NASDAQ 100, and Russell 2000 futures contracts. They're all trading down this morning, and this is a very bearish condition. Interested in to see the rapid move down at the higher open trading hour. Trade wars back in the center of the news. Your student Dat. First of all, really good goals, and I like the approach that you have, and what Dad did is he took some screenshots of the setups that he found, based on his own, analysis and whatnot, and he wanted some feedback on it. Now, this is a great way to build a playbook. It's also a great way to stay organized, and if you know how to do, screenshot and grab and then put your thoughts on paper, a picture is truly worth 1,000 words. And maybe a video is worth, 25 emails. I don't know what maybe there's a new saying I'm going to come up with. I don't know. Demo trade on 4 stocks, JP Morgan, OMC, UPS, and WFC. Add other to watch list and wait for setups on a bunch of different stocks, and then all stock picks are looking great today. Now, the first thing I got to do, Dat, is evaluate your market bias call, okay? Now, you mentioned a -3 because the markets were trading down 3 days ago. It's Sunday now. I just got back from a camping trip. That would have been on Thursday, right, when the market was hitting a high point and coming down. And I want to evaluate that and give you some feedback on that. Now, the market in general is in an uptrend. Okay, one Friday, Thursday morning, it looked like it was going to go down. That's where you were looking at it right here. So it's hard to see this, guys. There's a long lower tail right here. When Dat sent that email in the morning, the market looked like it was going to go down, okay? On the 2nd, and let me show you the trade setup here. He sent it on August 2nd at 5 o'clock in the morning, so pre-market before the market opened. The news headlines were telling us the market was going to sell off and all that kind of stuff. It was fading down. It opened up in the AM and then took off, okay? So actually the market didn't carry through at all, Dat, from a bearish perspective. It went up, 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 flat overnight, up, 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 up on Friday. Now, if we look back at your analysis, your market posture and your market bias would have only been a -1 or a -2 if you were day trading. Even if, and I'll give you all the benefit of the doubt in the world, that what you were watching was happening right in front of you and it was selling off, and it was, but the market wasn't bearish, right? We don't change our posture. And by definition, what we call market postures is kind of like your market opinion. And we put it in numerical form, a -3, a -2, a -1, a 0, a 1, a 2, or a 3. That reflects how bullish or bearish you are on your overall portfolio. So the ES was dropping a little bit in the morning there, Dat, but I wouldn't have called that bearish. The YM, same thing, kind of overall uptrend to neutral. The NASDAQ actually has been really strong. And the RTY was kind of flat to down. So I think what happened, and it's very common for a beginner, it's not necessarily a bad thing that you're in there giving, your best shot because you're in paper trading right now. But I think what happens is the headlines can come out and you can overthink this stuff, right? Because I'm sure the headlines were very negative on Thursday morning about trade wars with China and Trump and all this kind of stuff. Well, guess what? The market action did not dictate that. There's a couple of things I would strongly recommend, okay? On tackle trading, instead of getting your news and analysis from, you know, a million different websites that are just journalists, go and watch the daily halftime report so that you can hear right from the coaches about what they're seeing in the market. There was not a single day in the last month where the coaches called the market bearish. Okay, so I think your market posture analysis might have been off to begin with, which kind of put you down the wrong path when you were starting this overall analysis. Another resource I would use on the reports, the most important report for your posture development is called the market scoreboard. Okay, now every weekend, so the weekend before you had your setups, right, on the 28th, you would have come in here. Now, if you go down, you would find market analysis right here, okay? So this is what I was talking about, your market strategy. So to match the strategy to market conditions, you called it a -2. The market conditions were not, simply were not a -2, okay? As a matter of fact, if you look at how the market was setting up, the coaches had the SPY as a 1, most of the sectors as a 1 or a 2, right? So I think you were overthinking that one news headline in the market, that one morning in the market, trying to do the best you could and go and create a setup and then go do something with it. I get it, but you were over evaluating and over analyzing the market. Now to the individual setups. This document, you have a bunch of them. JP Morgan as a bear play on the weekly, you're at resistance. On the daily, you're at a high point. Selling candle, but you're above the moving average. This is what I would call a counter trend trade, and not one that I would, you know, necessarily say you've been trained on, okay? You know, if you go back to your core training, you know, Master Trader, Technical Analysis 101, they always say to trade with the trend. So I think you're trying to get a little too creative, a little too tricky here, in my opinion. JP Morgan, good analysis on the doji. Good analysis on resistance. I see you've drawn some Fibonacci extensions and retracements, I should say. You're trying to pick a top here, Dat. You know, it's hard. Most traders usually will recommend to beginners, don't try to pick tops, trade with the trend. So if you were looking for a bear setup, I don't know if JP Morgan would have been the first one on my list. Your entry, stop, target, and I'm not going to overthink that part of it because I don't like the setup to begin with. I do like that you were doing it though. You know, it looks like your target, your stop, very tight, by the way. I'm looking at some of the numbers here. This is a swing to day trade setup. Okay. Reward to risk ratio was not 2 to 1 or better for a directional delta based trade. And that's kind of what you're looking for. Order entry, stop limit, and then another limit. 10 shares are these, yep, on stock. Stop and limit don't make sense. Your order entry is set up incorrectly here. Okay, you're first of a sell short of a limit to then, oh, well, hold on a second. No, let me think through this. You had a day order, limit entry, limit target at 105, stop at 119. Yeah, no, that's fine. No, I was reading that wrong, so my bad there, Dad. Looks fine, but I don't really like this setup, I'll be honest. You know, and that's what I always am. But with JP Morgan, you know, you're trying to counter trend trade, pick a top on a market where the market was generally actually bullish, not bearish. Now, if I look at JP Morgan, because we have a couple of days in the rearview mirror now, it did in fact go up for a few days. Okay, so didn't love the setup on that one. I think that there's some good things. I'll get to the takeaways here at the end. 10 shares, 10 more shares when the stock goes in a bearish directions. I really like this technique, by the way. So you are going to start with 10 shares and then add more shares if you built a profit. That's called scaling into a profit. I do like that mechanic and that mindset from that. Now, Disney, you have to wait because of earnings in 5 days. Thinking the stock would gap down, but that is gambling. I don't want to fall into gambling unless I have an earnings play, which I don't have an earnings strategy. Well, you kind of nailed it yourself. I mean, if you have earnings and you don't have an earnings strategy, you can't play this. Now, I really believe you're putting too much emphasis on these resistance or falling trend lines, and probably you're looking at this thinking, I want to sell something short that's at a high point to go back down, which makes sense. There's nothing necessarily wrong with that, but you don't have confirmation on the trend here. Okay, on the daily chart, higher high, higher low, higher high, higher low, higher high. All of the moving averages are pointing up. You have strength in the candles. I don't see a swing trade here, especially with earnings. OMC, I like this one a little bit better, okay? Now, for a bear perspective, if you were going to go bearish on the market, down, 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 down on the weekly, selling recently on the weekly. On the daily chart, bearish sell-off, backfill, bear retracement, you missed your trigger, okay? Now, that would have been the trigger the day you were looking at it, all right? So set up right here on that one. Trading inside a strong support and resistance, at support, looking to go bullish and trade onto the upper channel after earnings. You're doing everything mean reversion. And I actually liked this one from a bearish perspective, and then I'm reading your notes and you're looking for it to go back up. So you're falling into a trap that traders can fall into. And that's when something's high, you think it's going to go down, and when something's low, you think it's going to go up. It's the opposite, okay? You have to trade with the trend. Learn trend, or what we call continuation pattern setups. This could be a psychological thing. Sometimes it can be hard for a new investor, a new trader to buy something when it's hitting a new high on a breakout, or to sell something short. Because you look at OMC and you're thinking, well, it's already down here. How's it going to keep going down? Well, that's the whole purpose of trend following trading. I think you need to go back to review continuation patterns, DAT. High-low ATR, looks like you're getting some data points. Setting different stops. This is really good, DAT. I love that you're data-based. That's probably why you're a mean reversion instinctive trader, by the way. You love numbers well enough. I'm sure you're thinking, well, Tim, it's always got to come back to the middle, to the average, to the mean. Well, maybe. Don't try to catch a falling knife. You got to deal with the entry point setups and define some rules on what you're looking for. OMC, same setup here. Yeah. Buy on a limit, target a stop. This doesn't have a trigger component to it, by the way. This, both orders, you've done the same thing. When you buy on a limit without a trigger, you're just hoping to get in the morning in the market. A straight limit order is fine if you know the price you're willing to pay. Usually traders will do a triggering order using a stop limit or some other mechanic like that. SYF you put as a weight, so I'm going to skip that. Ford, you put it as a weight. We can revisit these a little bit later. Netflix, a bullish retracement. On the weekly, if you do a bullish retracement on a weekly chart here, and I'll be interested to see how you set it up. If you do that, you got a position trade, okay? So if your analysis is that it's a bullish retracement here, then your target and stop mechanics should develop on the weekly. Whereas if your analysis was on the daily, completely different animal. Now, by the way, I love this setup. I talked about it on the halftime report over on our YouTube show. Old resistance, new support, pulling back, showing some interesting information there. You were thinking bull retracement, 61% fib on the weekly chart. True. Very good. I like it. Good bullish trade all the way. It's one of the FANG stocks. NQ's not doing so good this morning, so you're going to postpone. Well, I think you were overthinking the morning action, quite frankly, on that one day there. And that's part of me. You were going through your analysis. I love what you're doing here. Just trying to give you some constructive direction. Fox A, bullish retracement. They're also a takeover, some kind of takeover deal they're dealing with Disney and all that kind of stuff. So I don't know what the news is on that. Pullback, settling in, could set up for a move. Go check the M&A activity on this one here, DAT. Retracement down to 38%. You love those fibs, okay? So why on this one 38 matters to you, but the other one you had to wait till 61? I mean, until traders can answer questions like that, I usually kind of take Fibonacci retracement analysis with a grain of salt. what I've found is people can always put it on there and make it look good if they're looking for confirmation of their original bias, right? It's interesting how technicals work sometimes. Facebook, you have as a weight, then I'll weight as well. Bearish retracement on AVGO, very good. As a matter of fact, here on this one, that's a beautiful setup. Old support, new resistance, breakdown, backfill, trigger. The trigger was the day you put the second arrow here, by the way, okay? So if you missed it and you waited till the next day, then you're not swing trading. You know, you have to be precise with your entry points. Risk is more than reward, so no trade. Let's see where you set that. Risk, you put your stop at 229.53. Okay, that's right there at the high. And you put your target 203.89. Interesting. So you had 13 and 13. I wonder if you set that up as an option spread, if you could have made it work. I don't know if you're just doing stock right now. It looks like most of your setups are through stock. Biogen, you called it a bear play. There's a lot of noise in there, Dat. Gap up, gap down, backfill all over the place. I'm not sure there's a play at all for a directional standpoint on that. UPS, bear play. Okay, trading resistance, looking to play it to backfill back down. Seems like you've got that instinct about that. At least you've got some candlestick action here confirming that. I mean, this is better from a mean reversion or a counter trend perspective than some of the ones we looked at earlier in this video. So I do like those pink, you've got them colored as a pink candlestick, sell, 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 kind of showing some weakness at the top, but you're above all those moving averages and the old resistance points. And that's generally a strong trend right there. I think your instinct to go counter trend is a little too quick, okay? It kind of goes back to the original market posture probably. You saw a negative headline and you think the market's at a high point, got to come back down. And so you're trading what you want to happen, which is backfill in the market, because it must make sense somewhere in your psychology or the way you look at charts, instead of what actually is happening. Interesting stuff. I'll tell you what, I like all this. In general, for a paper trader, you got to be willing to take a shot in the dark and make as many trades as you can as you're building your skill set. There are some things that you can get better at. There's no doubt about it. Order entry, you got to learn to trigger those things a little bit better. Your overall trend analysis and setup analysis, I think you need to develop some rules on. I love that you have watch list. You have to learn to trade with the trend though, Dat. This is not a bear setup on Wells Fargo. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, old resistance, new support, rising moving averages. I wouldn't call it a bear setup just because you see it hit this old resistance point and you think it should come back down to the bottom. I mean, it isn't a probability setup to play it that way, okay? So some of this analysis, I think you need to define what you're willing to trade. And it's possible. I'm so open-minded as a coach. I've been doing this 13 years and 30,000 hours probably. You know, helping people, teaching people, trading myself, building curriculum, doing shows and webinars and all kinds of stuff and teaching classes. And that's how I met you. You know, I don't ever believe I have the only answer to trading. I mean, there's a lot of different setups that can work and whatnot, but I'm seeing some stuff that's counter trend. And my belief is most likely you read the market wrong and you ran too far with it, okay? Now, I like them though. I mean, there's some good stuff in here. This is your market analysis, by the way. You know, ES at the top, ES at the top, YM at the top, YM coming back down, overall upward movement after that point. Yeah, and this just is what I think that you ran with, which isn't true. There wasn't fear in the market that morning. I mean, I was trading that morning, Thursday morning. I wasn't afraid. The market was not range down. It was not down more than 1%. You didn't have massive selling. You didn't break below support. You didn't have an increase in volume. You just had negative headlines. And those headlines weren't really to do with economic reality. So I think you were looking for something necessarily that may not have been there. Okay. See these. Oh, interesting. So these are your headlines. Jeff Bezos would need to spend $28 million a day to avoid getting richer. Okay. U.S. stock futures fall with drop pinned on fresh trade worries. Here's the headline. Analysts blame the selling on the Trump administration, saying it's considering more than doubling its proposed tariffs. S&P futures fell 0.3%. I want you to think about something, Dad. Now, if the S&P only dropped 0.3% on the news, then it's not big news. There's no fear. There's no sell-off. There's no continuation. A big move in the market's 1-2% or more. So these 0.3, 0.6, 0.5% moves, that's just noise. Because back and forth, you got to go to the chart and focus on the chart, okay? I love that you're here at briefing.com and using FinViz and then grabbing the market news headlines. I believe this probably, on investing.com, something like that. You're doing a good job going through your process, heat maps, okay? Tech, this one looks like a 1 month performance. Look how strong the market is, Dad. Forget the headline here. Look at your own heat map. For a whole month, the market has been showing incredible strength. Google, Microsoft, Amazon, Apple, Johnson & Johnson. All of this green. Some red, Facebook, Avgo, Foxay, Netflix, Ford, but mostly green, right? 1 week, mixed. Pullback in tech, some strength. Apple was up big. Healthcare was up nice. Earnings were mostly over. The ones in baby blue are done. The ones in pink are upcoming. So the market's already processed most of the news information. Then the 1 day performance. Now, by the way, when you took this screenshot, I don't know if it was pre-market or not, but you have mixed markets right there. I'm guessing you took this on Thursday morning based on your email. Okay. Your email came in, let's look here, 5:24 in the morning. So the market was not open yet. You got to remember, okay, that heat map was from the previous day. So when you're doing a 1 day performance, kind of make note of the time. Forex Factory calendar. I love your process. You have a really good daily routine. So let me give you some general guidelines here. Number one, keep trading. Use anything I've sent you in this video as a way to try to get better and improve. Focus on understanding. I would say if there's 3 major takeaways from me, let's do the positive ones first. Love the energy, love the attitude, love the process, okay? So stay with your daily routine, set a goal for your paper trades and get in there and do a lot of them. I'd say that's number 2. And then number 3, build on the momentum. So much in life and trading is about day at a time, getting better and better and better. So that's 1, 2, 3. Now, 3 maybe things to work on to get better. Your trade identification. Far too many trading setups were counter trend. Identify the difference between 2 terms, continuation and reversal patterns. You should be working mostly with continuation patterns at this point in your trading, okay? That would be that. Then number 3 is I would get your analysis from the coaches more than from, the news headlines. So go to the market scoreboard and review their posture each week. Watch the halftime report on tackle trading and review that posture each day, or the market recap, depending on what time of day you come in. So you should see a playlist here, live market halftime report, a playlist here, market recap, trading glossary, option trading tutorials. There's a bunch of stuff, but these live shows, you're getting analysis every day to help you interpret the news. Because frankly, I think that you overthought the news, and that sent you down the wrong path on so many of your setups. But, take it day at a time. Great job, Dad. Hopefully this video helped you a little bit out. I love the overall flow of what you did. I think, there's some things we can get better at. So, all right, very good. This has been Coach Tim, and we are done with this one. If you have a question for an upcoming Coaches Mailbag, shoot me a message, on YouTube, to, our Facebook channel, Twitter, @TimJusticeUtah, or join our community over at Tackle Trading and send me a message through the clubhouse.